Stocks continue to drive higher with not much of a pullback. What's going on under the surface? Let's talk about the macro and some of the AI supercharged movers that are driving this market higher, as well as something interesting happening under the surface with some stocks leading and some stocks falling. In this video, I'll talk about some of the stocks that I'm watching and some of the key drivers to this market right now and whether they are sustainable. Let's jump in. First and foremost, the S&P 500 remains a little bit stretched to the upside. Doesn't mean that it can't keep going, but this is not really a spot where I'm looking to aggressively lean in and buy stocks, first and foremost as we get started in this video. And one of the things that concerns me is the RSP versus the S&P 500. And if you've never heard of the RSP, let me explain what this is. The RSP is the equal weighted S&P 500. Imagine if you took the listed companies in the S&P 500 and put $100 in each one. We would say that the overall investment is equally weighted across all the stocks within the S&P. The SPY, however, which is what most people recognize as the S&P 500, is actually market cap weighted, meaning certain companies get more allocation based on their size. And we've seen in recent years a dominance of the bigger companies taking the lion's share of gains. So when we compare the RSP versus the S&P 500, you can see the kind of downtrend that we've been in for a while. This is what many traders are pointing towards as a concern in markets, which is concentration risk. Specifically, a small number of companies at the top of the stock market are taking most of the gains, and a lot of the other companies are doing okay, but not nearly as well. Is this a huge risk to the stock market? It's not necessarily a huge risk, but it's also not necessarily a great thing either. We do want to see in good bull markets participation from most sectors and industries. In fact, here's something interesting from our market breadth tool within the stock box. We only have about 32% of the stocks that we watch within the stock box, which is like a listed like 145 stocks or so. Only about 32% are above their 20-day moving average. Most are above their longer-term 200-day moving average, but we can see some stocks are really carrying the weight, like Oracle, which we're about to talk about, or AppLovin, Micron, and Google. We have a couple stocks that are really dominating a lot of the gains in this market. Just take a look at the massive surge higher that we saw in Oracle stock, ticker symbol ORCL. It's pulling back here a little bit today, down just over 4% at the time of recording this video. But the stock is up massively from where it gapped higher on its earnings report, which, by the way, it missed expectations. Here's the latest earnings report tracker on Oracle. If we hover over this, you can see the earnings per share estimate was $1.48 per share. It actually came in at just $1.47, so it did technically miss its expectations. And yet with the stock move higher, what's going on? Oracle's revenue projections leave analysts slack-jawed. Never heard that expression, but that's a good one. As Oracle's stock was soaring following the company's earnings report on Tuesday, analysts were gushing about the numbers and the company's prospects in artificial intelligence. Oracle now sees cloud infrastructure revenue climbing to $144 billion over the next 4 years, up from $18 billion this fiscal year. So long story short, people got really excited about the forward projected earnings for this company. And again, a rally in the stock this big, I mean, this is a big company. To rally by at 1.40% in one day is pretty remarkable, to say the least. Congratulations to shareholders if you own Oracle. And if you're like me and don't own Oracle, all we can do is, in my opinion, sit back and just respect to those who own it, right? You can't really chase this thing. I'm not a big fan of, buying the stock after a pop like this, but I also would not be surprised if there is some continued euphoria in this name, as it kind of represents a lot of the AI hype that is so strong in markets right now. Another AI name that has come back strong is Google, which is a stock that I own. The only issue is I sold calls at the 215 strike price, so I'm giving up some of my gains here with this recent explosive move higher in the stock. It is pretty amazing because just a couple months ago, people were thinking Google is way behind on AI and it is no longer part of the conversation. It's going to get replaced by all the chat robots, right? Your chat GPTs and XAIs and all those things. And yet Google has proven over and over through the decades to stay on top of innovation and technology. It's a company that I love. I've mentioned that it's my favorite stock. And if I do get called away, I'll be a little bit sad to say goodbye to the shares. Let's take a look at that options play. So I own 200 shares of Google, and overall the stock has been a really nice winner for me. I'm up 43.5% on my Google shares. However, I've also sold a call, which has been clearly the wrong move. So I sold a call at the 215 strike price. Stock has continued to push higher, and the expiration date is coming up, the 19th of September. And so I have a decision to make. Do I want to just eat the loss and hold on to my Google shares? Do I want to let the shares get called away? Again, that's what will happen is if I let these go to expiration and the price is above the 215 strike price, this is a covered call position, which we've discussed many times in the past. And if you want to check out a full video on this subject, we'll pin it in the top right here. You can click on this video to check out my options trading strategy. Today's video is sponsored by Moomoo. And if you haven't heard of Moomoo before, they're a one-stop global trading platform with over 26 million users across the US, Australia, Singapore, Canada, Malaysia, and Japan. And Moomoo offers $0 commissions on stocks, ETFs, and options trades. They also offer free level 2 data and real-time options chain data, no extra charge. And the Moomoo platform is super advanced. They offer a really powerful options trading tool, and you can even track latest public figures holdings, like Nancy Pelosi's, directly within their portal. And if you want to learn something about a particular stock, just ask Moomoo's AI feature. With this tool, you can ask for trading insights on your favorite stocks. And if you want to tap into what institutions are buying and selling, check out their institutional tracker. This tool allows you to explore top institutional holdings. What sets Moomoo apart is their incredible platform for researching stocks, checking out all sorts of different analyst rating tools, and insider holdings and trades. And for a limited time, as shown on the dates on the screen right now, you can get up to $1,000 in Nvidia shares, plus 8.1% APY for US users. As you can see on the screen, please follow the criteria here and make sure to use the link in the description to get the full context behind this offer while it is available. It is available for only a limited time. And are you already trading with another brokerage, but all these tools sound pretty cool? Well, I think so too. And they're currently offering a really cool 3% match on the first $1 up to $20,000 transferred from another brokerage. So if you're looking to take your trading tools to the next level, check out Moomoo and take advantage of some of the offers available using the link and details in the description of this video down below. Now back to the video. But long story short, I've rented out my shares, quote unquote, and I've sold covered calls, and now I'm paying the price because I've essentially rented out my shares, and now someone has the right to buy them at just 215, even though they're trading at 237. In hindsight, sometimes this looks really silly when I do these covered calls, but you have to remember this is the context of a bull market when things are going up like crazy, and it's hard to predict that they're going to keep going like this. I do think that there is limited upside in stocks personally from the macro, which we'll take a look at now. We're looking at the macro screener within the stock box, and what we can see here is that the stock market impact overall from the macro that we track is not looking super hot. We've had a round of really poor jobs data, which in my view threatens the consumer, and if you get a weakening consumer, it could impact stock market earnings and bring the whole thing, and not necessarily crashing down, but could pull the thing down here. We could get a little bit of a pullback across stocks. That is my opinion. I'm not looking to short stocks. I do own many companies still. I just think that there is limited upside, so I'm not buying a bunch of stuff at this time. Today's consumer price index number did come in line with expectations. We were forecasting for 2.9. We did actually get 2.9, so nothing huge there. But on an absolute basis, 2.9% CPI, 2.6% PPI, and 2.9% PCE, inflation readings are still pretty hot. Put that in combination with cooling jobs data, and it's a little concerning out there. And here's a bird's eye view of the consumer price index here in the US, which is still on the rise recently. And what kind of stole the show on the macro front this morning was unemployment claims data actually spiked higher. We've already been seeing a rise, but we saw a shoot up here today with 263,000 jobless claims here in the latest filing. That was up from the forecasted 235,000. So to me, the macro suggests stocks just don't look super attractive at these levels, and I would much rather wait for a pullback that I may not get. In trading and investing, patience is really difficult, but it's also really important. And while stocks look like they just can't come down and they're just going to melt up forever, there comes a point where very quickly and all of a sudden the market pulls back, and you have to be ready for those moments with your watch list of stocks. So what is my watch list of stocks? To help me find this, I use the Stockbox top stocks indicator. The number one stock on the list right now is Amazon, which I agree heavily with. It's one of my favorite stocks, and if the price were to pull back, this would be a buy the dip opportunity in my personal view. Financial readings show that the company, while yes, it's not necessarily a cheap stock, it's still cheap relative to its historical averages. We also have really strong analyst ratings on the stock, and institutional activity shows big players are still buying the name. Uber is another name on this list. And if you've been watching my channel, you know I already purchased some shares of NEE, which is a utilities company, NextEra Energy. They also own Florida Power. So during times like these where you have the stock market at all-time highs, having a tool like the top stocks indicator helps me to keep a level head and create my wish list, if you will, for when prices actually go on sale in stocks. And I know it can be a really mind-numbing thing every day to watch the market just go up and up and up and feel that you're missing out. But truthfully, the market is very volatile and all of a sudden can wake up one day and decide it wants to go down 10, 15, 20% in just a few short weeks. We saw that back in April. So being prepared and waiting patiently for opportunities to buy names is the name of the game. And a lot of people mess this simple concept up. They buy high and they sell low, whereas we know the old expression is to buy low, sell high, and have the patience in between. By the way, the top stocks indicator, as well as several of the data points that I've showed here, are available within the A1 Trading stock box. And if you don't have access to the stock box, now's your chance. We're currently offering it for 40% off for a limited time. You get access to all the tools that I just showed you, and it is a one-time payment. If you want information on how you can get access and the promo code details, all can be found in the description down below. Also, if you have questions or you're interested in an additional 5% off, send us a direct message on our website using the very first link in the description down below. By doing this, it will allow you to connect with a real person on our support team who can get you access to the tool for an additional 5% off and answer any questions you might have about the tool. This is not a holy grail system or a magic money printing machine, but it has been extensively useful in helping me to spot stock market opportunities, and it's built around a system that I've been, again, designing over the last few years. The stock box scans technical readings like momentum and overextension, sentiment data like what analysts rate a stock, as well as institutional activity, whether big players are buying or selling, and a list of financial readings like debt to equity, ROE, price to free cash flow, dividend yield, revenue growth, earnings growth, price to sales, forward PE, and PE ratios. All of this is automated, generating a list of stocks for us to look at each day, which is exactly what I do on this channel. So if you don't have a copy of the stock box, now is your chance. And some of you guys might be familiar with my other kind of primary product that we talk about frequently, the Edge Finder. If you're more of an index futures trader or a commodities indices trader, Forex trader, the Edge Finder is actually the original product that we built. And the stock box is the newer variation specifically built for stocks, ETFs, and options traders. And if you're more interested in macro analysis, like I did earlier, right, looking at the fundamentals around the US economy, it may be worth also checking out the Edge Finder. You can explore all the tools that we build here at A1 Trading by going to our website, a1trading.com. Yesterday, Nvidia had a nice bounce back here. Remember that I did sell my shares, I think a little bit lower to where we currently trade. I do keep an eye on this stock because if it does give me another oversold reading or a push lower with the broader market, I would be potentially interested in buying back into my shares, though I do think that there is still room for a little bit of a downturn in the market. So if that does happen, I'll be watching Nvidia as a possible candidate for a purchase. Tesla is another stock that I own shares in. I've sold calls against my position. Let's take a look. So here's a look at my Tesla. You can see all this mess that I've got going on here. I'm long the stock. I've also sold the 400 strike price calls as well as the 355 strike price calls. Currently, the stock price is very close to those $355 strike price calls that I shorted. And so if the stock price continues to push higher, it is very possible that I will get called away for half of my position, which actually, if you've been watching my video, was the initial plan all along, was to sell half of my Tesla shares through covered calls to collect income in the meantime, which has worked out well. The stock has gone sideways, meaning a lot of the calls that I've been selling have expired worthless, or at least I've been able to take profits on them and sell fresh calls. So the plan is if Tesla rolls over, I'll keep selling calls, and if it moves up, then I'll take profits on half of my position. I do like the idea of keeping some Tesla in my portfolio, but it has become a pretty good sized position overall with the near 50% gains that I've had on the stock. So I'm trimming back a little bit here and just taking half of my trade in the form of profits through a covered call position. Another stock that's been in the news here recently is Apple, which had their Apple kind of innovation day here. And we did actually see a negative reaction in the stock price following the announcement of essentially another iPhone that's just thinner. And then also we did get the AirPods Pro 3, which I do think is actually pretty cool, with the ability to essentially translate real time when speaking to someone in another language. That's pretty awesome. Interestingly, we've seen Duolingo, the company that of course helps people to learn languages, has been trending lower and continue to push lower in recent weeks with this Apple kind of innovation. It does arguably take a little bit of the hype out of learning a language if technology kind of rules that as obsolete, unless you just have an interest genuinely in speaking another language for the art form of it. But a lot of people learn languages for the utility of it. And if the utility can be replaced by technology, again, this stock is not one of my favorites personally. It's been a high-flying name, but this is in my opinion, a very high risk, high reward type of stock. At $300 a share, to me, there's a lot of risk here. Here's a look at my NextEra Energy position. You can see it's rounded up a little bit here. I was a little early to the idea. We retested this support area, finding some support. Let's see if we can get a push higher in some of the utility stocks that I recently purchased. Specifically, NEE and XEL both popped up on the stock box watch list, and I was able to pick up shares here at support. So far looking okay, up about 310 bucks on the XEL position. And one thing I also wanted to reiterate, going back to the initial parts of this video, the MTUM USA Momentum Factor ETF essentially buys and holds on to the strongest performing companies in the stock market. Long story short, you can look further into the strategy behind this ETF, but that is essentially it. It buys the winners. And this stock, again, or this ETF, I should say, has been performing really well, which is sort of the nature of 2025. The winners keep winning and the losers keep losing. But please note that this is not a universal law in trading and investing, and that this is not always how it goes in stock market universe. Oftentimes, today's winners turn into tomorrow's losers, but at least in 2025, momentum seems to reign supreme. That is yet again why I find this market to be very hard to try and take a bearish position in, not something that I'm doing or actively pursuing. I think you have to be really careful trying to bet against what looks to be an AI-crazed bull market. Question is, are we in a bubble? And in my opinion, in 5 years, you'll look back and say, yeah, we were in a bubble, but it could keep going in the meantime. Like we could see another year or 2 years before things start to, sell off in markets. So it is one of those things. You just got to be real careful trying to call a bubble in terms of the price. You can say, hey, is AI a little overhyped? Maybe, right? Maybe there's a case for that. They're great innovations. They're changing the world, right? There's no question that AI is a powerful technology that is going to get massively adopted. The question is, are people overpricing it in the short term? And that is very possible. But again, only time will tell. And I definitely do not want to be on the short side of what has been a really great bull market. We've seen just a phenomenal run, not just for 1 year, 2 years, but really for many years. We had a pullback, a pretty good pullback in 2022. Markets were down 25% or so, something like that. A steep sell-off in 2020, but it has been a long time since we have seen a true kind of resilient bear market like we saw in 2000, right? Or 2008, where you actually see a suspended period of time of just straight up market selling. And it will happen again, in my personal opinion. A lot of people think it's impossible that happens again, just at the worst possible time. And so again, I don't want to make the bet that I think it's going to happen tomorrow, but I'm very open to the idea and wanting to remain diversified in case you do see stocks have a downturn where I think we could get some great, longer term buying opportunities. I think if you do get a couple, really serious down months or even a year or two, that's a buying the dip opportunity in the bigger picture, in my personal opinion. As always, we'll be covering what stocks I'm watching and how I'm playing this market each and every day on this channel. If you enjoy this commentary, make sure to hit the thumbs up button, subscribe if you're new, and we'll see you back next time.